All right, so I want to talk about what's in my stock market portfolio this week with Questrade. I mean, it's a little messy, but it's definitely on track for something good if I can stick to the plan and if the plan actually works. So in my RSP, I still have my 200 shares of Aurora Cannabis that I bought at $10. It went all the way down to 8 something, but it climbed back up to 9 right now. And I had sold call options expiring April 26th, and I collected 85 cents. And I knew that earnings is coming out after April 26th, so I made sure to stay away from earnings. And I collected 85 cents, so that's about 8% in 1 month. I've got good old Dividend 15 Split Corp 2 that I'm just keeping for dividends. This one has suspended its dividends for a bit, but I'm being patient. Got DFN.TO that has never missed a dividend payment. Right now I'm getting a 15% yield, but I'm also up 13% on the stock. So if I want to sell for capital gain, I could, but I'm going to keep it for the dividends per month, sorry. I've got some Ford shares that I just want to get rid of, but I'll wait a bit. I actually sold covered calls on Ford, so I can't get rid of it. I forgot. I sold at 23 cents for expiring June 21st. So I'm going to keep it for a bit. While I'm holding on to it, I'm getting 7% dividends or 6% dividends per year. I've got FTN.TO, which is Financial 15 Split Corp that I bought at 7.4. This one I'm keeping for the dividends as well. I think I'm making about 20% dividends per year. Got Honda Motor that I want to get rid of because I've been holding it for a very long time. All I'm getting is 3% dividends per year. So I'm going to try to get rid of it as soon as I can, whenever I have an opportunity. Got L Brands that I bought at 26.2. Sold call options the first month, sold call options again the second month. Making about 4 to 5% every month. Expiring April 18, I've got Novavax, which was a big mistake because it was a pharmaceutical company with a small market cap, and I only bought it for the high call premiums, but I got burnt. Bought the stock at 1.96 and look at it trading at 55 cents right now. So I'm down 72% on the stock. But I did collect a lot of premiums on that stock. I collected 20% or even a little bit more the first month. And then when the stock dropped 72% the following month, actually I think it dropped the same month, the only option I had was to sell all the way to October at a 1.5 strike price because I did not want to go below 1.5 because my cost was 1.1515. So I had to pick a strike price that I'm comfortable selling at. So I picked 1.5, and the only thing that made sense was October, and I collected 10 cents. So yeah, so I'm paying the price for buying a stock that I know nothing about, but it's still giving me some money. It's just going to be a long-term play. I'm going to have to wait a bit, at least until October. And Vodafone was also a bad play. I bought it initially for capital gain potential and dividends, and instead the stock just keeps dropping. But I decided to turn it around and try to get something out of it besides the dividends. Looks like I'm gonna have to hold on to it for a while, so might as well just get some call premiums from it. So at a 22 strike price, I sold a call option expiring December 20th. Collected 38 cents. So just realize that there's a way to group your positions, and if you group by strategy, depending on what your strategy is, it looks neater. So in my margin account, I like to use this by strategy because in my margin account, I basically have the same strategy for all my positions. But in my TFSA and RSP, I've got different strategies. So I'm going to stick to position to keep it simple. So this is another pharma company that I bought, I just bought for the premiums, which was risky. It actually went up to 11 this week, but dropped back down to 9 right now. So right now it's a good trade, but we'll see what happens come April 18. So right now it's a good trade. It's going well, but it went very well this week. But I don't know why it dropped back down to 9. So as long as it stays above 7.5, I'm happy. I've got Chesapeake Energy that is doing well for me. I sold call options 2 months in a row. If I get called away next month, that's okay, because I sold at a 3 strike price and I bought the stock at 2.8. Got some more dividend 15 split corp. I've got some more Ford shares. I've got a Ford option that I bought long, but it's obviously killing me. I'm down 58%. I've got Hudson's Bay, 100 shares. I should probably sell a call option against it. We'll see. Got Immunogen, which is another risky pharma company. I got burnt as well, 52%. That's what happens when you get greedy. And but I sold call options for April 18, but I sold at a $3 strike price. And right now the stock is trading at 2.7. So I don't want it to close above $3, or else my shares will get called away at 3. And since my cost on this is about 4.11, then I'd be losing $1.11 per share. So I don't want the stock to trade above $3 come April 18. I guess I was trying to steal some premiums before April 18 and still keep my shares, hoping that the stock stays below $3 come April 18. So we'll see. Got some Kraft Heinz alone without options. Got some Micron that's been all over the place. Went all the way up to 42, 43, and then 39. Now back up to 41. Regardless, I just bought it for the call premiums. So even if I get called away, I'm okay with that. Got New York Mortgage Trust that I bought just for the dividends, and I'm keeping it for the dividends, about 13% per year. And I've got Teva Pharmaceuticals that was a bad trade. I bought it at 18.5, sold call options the first month. Then the second month, the stock was very low. So I had to sell. So I sold call options again, but I had to go all the way out to May 17 to collect something decent. Collected 28 cents, which is very low. So first month it went well, second month it didn't go well. And I'll have to wait till May 17th. We'll see what happens if I can sell more call premiums on it, but it won't be at 3% per month, which is what I'm going for. Still got my American Airlines. It's also been all over the place, trading between 30 and 32. But I bought it at 31.35 and I collected call premiums again the second month. So I'm happy with that. So I've got some trades here that I'm trying out. So I don't want to talk much about them because I'm still trying them out. I don't know if they're good or not. But it's called an Iron Condor. It's an option trade. So I've got one on Apple, Adobe, Boeing, Disney, Netflix, Nvidia, and Tesla. So I'll talk about them when I have enough experience on them. So I'll just talk about my covered call trades. I've got Activision that I bought for 44.7. Sold call premiums at $1, but it's actually worth more now. Regardless, still made 2% per month on this one. And it looks like if the stock stays above 45 come expiry date, then my shares will get called away. Got Bristol Myers that dropped pretty hard. I bought it at 50, trading right now 47.71. But I collected some decent premiums 2 months in a row. And who knows what happens come April 18. It might come back up again and I'll be able to sell again some more call premiums. I've got cars.com that I bought at 22.8, closing at 22.8. Call premiums 1.56, but I sold at a 22.5 strike price, so I want my shares to get called away. We'll see what happens come April 18, but right now I'm in a good position. Got some Kraft Heinz, pretty bad position. Bought at 36 cost, trading at 32.65, and sold call options at 45 cents. Not getting much out of it. Macy's, I think it's going to be the 4th month come April 18. If the stock stays below 26, I'm going to keep it again, and I get to sell call premiums again. Probably making around 2 to 4% per month on Macy's, so that's good. This I just bought today, actually bought Sprint, and I made sure to get out of it before earnings. I think earnings is beginning of May, so I picked the April 18 expiry date, bought 300 shares at 5.51. Stock closed at 5.65, but I sold call options at 41 cents. If the stock stays above 5.5 come expiry date, I'll make about 7%. 7% in 3 weeks, and that's after fees, times 52 weeks just to see what it looks like annualized. That's 121%. Obviously, I'm not going to be able to do that every time, but just to give you an idea of the value of 7% in 3 weeks. So I've got Six Flags that's not doing too well, bought it at 54, closing at 49. So what's great about call options or covered calls is that even when the stock is doing badly, you can still make some money from the stock by selling the call premium. So although I had to go all the way out to May 17, I still collected $1.05 on a 54 price. So I'm still making money every month from my positions, even the ones that are doing bad. So that's what's really perfect about selling call. That's one of the things that is great about selling call premiums or call options. I've got Twitter that I bought at 30.5, trading closing at 32.88. Pretty good chance that it's going to get called away come expiry date. This will be the second month that I sold call options against it, so that's fine if it gets called away. Made some decent returns on that. I've got Weight Watchers that hurt me. I bought it at 30, dropped all the way down to 19. So I made some good returns the first month, but then the second month I had to go all the way out to May 17 just to collect some decent premiums, and it wasn't even that much. 15 cents on a $30 strike, $30 cost. And I've got United States Steel that I've had for probably 4 or 5 months, and I'm making about maybe on average right now maybe 3% per month with this stock, and we'll see now come April 18 what the stock is trading at. It looks like I'm going to end up keeping the shares, and I'm probably going to sell again at a 22 strike price since my cost is 21.81. I don't want the risk of the stock getting called away at a price lower than what I bought it at. Sometimes I take the risk if the call premiums are so bad, but if I don't have to take the risk, then I won't. So yeah, so that's what's in my stock market portfolio, my margin account, my equity. So what's actually mine is $10,000 right now in Canadian. In my TFSA, it's about 28,000 Canadian, and my RSP is about 19,000. This was actually much higher, but I lost a lot of money on Novavax here. I'm down 4,500 US. That I'm pretty sure I was at 27,000 in my RSP, so now I'm at 19,000. So almost lost $7,000 or even more just by making a greedy trade. Definitely paying the price, but I didn't sell Novavax yet, so it's not a confirmed loss, it's an unrealized loss. So as long as I don't sell, it's not confirmed, but definitely hurts to see that kind of a paper loss on your account. So yeah, just want to share my stock market portfolio, the strategy that I'm trying to implement, which is covered calls right now, selling call premiums. So if you have any questions, leave them in the comment section below. Any opinions, any comments as well. As always, if you're going to open an account with Questrade, use my referral code in the description below the video to get up to $250 back. And yeah, it is tax season, so if you're looking for an accountant to do your taxes, don't hesitate to message me. Link will be provided below. Thanks for watching.